Hi there, and welcome to the Enlightened Super Trader Education Weekly Market Update. Today we're going to look at the dollar index. If you've been following my online videos in regards to the weekly market update, we can see that the Dow, they're pushing it up to about 13,000. The S&P is around the 1400. So our focus for today, though, will be about the dollar index and where to from here. So based on the monthly chart, you can see that it's still pretty much on a downtrend, and no doubt about that. Oops, that's one. It's a downtrend. We have all the lower lows. So pretty much the last low was in 2008, about February, actually February of 2008. Now the last low last month broke through the last previous low, mainly all the lows. So we're back to the downtrend from here onwards, and if it continues from what we can see here, then back to the 1792 area. We can also put a trend from this point to that point. So there's a clear indication of the breakout of the primary uptrend. So the odds and probability to head towards the levels of demand between 70 and 79.2, which is the lowest of the extremities, to around the 71.84, 72 is more than likely to happen. Alright, let's go and have a look on the weekly chart. Here's a clearer picture. Based on the weekly, we still have lower lows and lower highs, mini dojis, but anything can happen within the week. And if it remains as a doji as a form of uncertainty, so we then were about to bound for a correction, trying to stabilize itself. Before a correction will occur, stabilization first has to be put in place. Okay, let's have a look at the daily chart. And the daily has a lot of gappings, so unless these are data flaws, but these are all the gappings involved. We have higher high and lower highs on the other hand, so still some form of uncertainty, which makes sense. Part of the weekly is a doji. So where to from here? If it will continue to drop, create a new lower lows, then back to around the 72, 70, 97 area, sometime in the future. But if part of the stabilization, we have a level of demand, and if it chooses to, if buyer starts to take control, then we'll fill on those gaps, and we're going to get some form of retracement. Where to from here with the retracement? If we got to take from the last previous high, and if that will be the last low, then approximately about the 76 area will be the first level of retracement. 75.50, 70.76 around this point in time as a form of retracement. Alright, so basically this is it for my 2 cents based on the dollar index, and now we're gonna look at the trade of the week. Okay, the trade of the week I'm currently looking at is the US dollar Canadian, where the movement's still forming a doji and also pretty much a piercing pattern. It all depends. If it finishes above the closing from last week, then there's a probability this is now going to be a form of retracement to head back around the 96, even all the way to 97 is more than likely. We have still though a lower highs but higher lows here, and if we look at the daily chart, we have higher high, higher low yesterday created a nice beautiful engulfing pattern right here, and the lows are higher compared to the previous high. Likewise with the high, back in the level of demand, the odds and probability for this to reverse to back to about 95.50 all the way to 96.50 is more than likely to happen. Alright, so that is the trade of the week. There you get your target points. The low of this candle right here, what, 2 days ago, 94.41. Target point, 96.50. But if you really want to be more specific, we can add in as previous high to very low. So 96.50 first level of retracement, target number 1. We can also have 97 and around 97.60, 97.80. Click add, click OK. So yeah, 97 and about the 97.60 area, which is also a good strong supply zone between those 2 points. And that is my trade of the week. Alright guys, you have a great weekend. Weekend for this week, and have a great week. Happy trading. Till next time, have a good one.